In this market update, I'm going to give you our current thoughts on gold and gold mining stocks. Hi, Jim Gore from Thor Wealth Management. Back in September of 2023, we were saying that gold miners were a good investment. Well, let's look and see how that recommendation has done. And if you look at this chart here, this is looking at gold miners, the New York Stock Exchange Gold Mining Index versus the S&P 500 capitalization weighted index and the equally weighted index, which is a better indicator of the overall market. And you can see in that time period that gold miners have actually outperformed both of those indexes and then twice the return, more than twice the return of the average stock in the equally weighted index. So they perform very well. So the question is, okay, they perform well. Where do we go from here? And we still like gold mining stocks. And let me explain why. If you look at, that was since we made the recommendation, if you look at gold mining stocks compared to gold over the last 5 years, gold mining stocks have significantly underperformed, which is very unusual. Gold mining stocks tend to do better than gold. And you can see here that gold itself is up 75% and gold mining stocks are only up 33%. So there's a lot of catch up for that to come back and perform in line with gold. And that's really represented in this chart. This is looking if gold mining stocks are selling at a premium or discount compared to gold. And right now, they're at 25% discount compared to gold. So we're buying them at a very cheap valuation. What's interesting is if you look at this chart at the very beginning, gold was selling back in 2008 at gold mining stocks were at a 25% premium. And then you see those two lines there from 2011 to 2014. That's very important because that's a time that gold mining companies got financial religion. In other words, they actually got executives that were interested in producing returns for shareholders, and they weren't going out and just getting gold for any cost. They were actually making sure that they were making a profit on that investment. But at the same time, gold mining stocks have become more at a discount compared to gold, and the gold mining stocks have continued to see their margins improve. So this is looking at the cost for getting the all-in cost for getting the gold out of the ground, and the line is saying what is gold selling for, and you can see that that line has continued to expand. So the margins in gold mining companies have continued to expand, and I could go look at many other charts to show that the valuations for gold miners is very, very cheap compared to gold. And as a matter of fact, some of the things that we're looking at for gold mining stocks, we can see actually 100% rate of return over the next 3 years in gold mining stocks because of the valuation at these levels. One thing that you have to also consider when buying gold mining stocks is what is going on with gold itself. And there's been some significant changes over the last 15 years. Before 15 years ago, so you go back 20, 25 years ago, central banks were selling off their gold. They said, why do we want to own gold when we can own securities that have some appreciation? We're getting some interest in it. Well, that mindset has changed over the last 15 years, and that's shown here that central banks around the globe are buying more gold. And a big reason for that was what happened, especially the last 3 years, with what happened with Russia and Ukraine. When Russia invaded Ukraine, the United States froze, and not only the United States, but Europe froze $180 billion of the reserves of the Russian central bank that were held in their securities. So now those countries, especially BRIC countries, are saying, hey, wait a minute, we don't want to own those securities that can be frozen. We want to own gold that we can actually use. And that's really reflected here. Everyone talks about what's going on with China. China is buying a lot of gold for their central bank, but actually they were the fourth biggest buyer of gold last year for central banks. You see Poland, Turkey, and India were bigger buyers of gold than China. So central banks around the globe are actually buying more and more gold, and especially in the emerging markets. They want that protection of gold itself, and that is going to increase the demand from central banks. The one thing that is very interesting is that we're not seeing yet the demand from individuals buying gold. And this is looking at the ETFs, exchange traded funds, that are buying gold itself. And you can see since 2020, the amount of money in those ETFs has actually fallen when the price of gold has gone up. So that means there's been net redemptions in gold ETFs because the price has gone up. You would expect the gold the holdings of those ETFs would go up with the price of gold. So actually, individuals have been pulling money out of gold. And if we have any pushback from individuals to buy gold, you would see that increased gold prices go up because we don't see central banks stopping their purchases of gold in the future. If you have any questions or concerns or need help with your portfolio, as always, reach out to us at thorwealthmanagement.com or give us a call. Take care, and I look forward to talking to you in a couple of weeks.
Subscribe to the Thor channel today.